So PCE on Friday, is that going to scare the horses as PPI and CPI did earlier? And is the market finally starting to come round to the higher for longer narrative?
To answer your last question, yes, I think Wall Street is coming around to the higher for longer, although I don't think as high as some people fear. But I think it's reasonable to assume inflation is going to go above past averages. Do I think Friday is going to be a number kind of like CPI and PPI? I do, actually. Remember, though, that there's seasonal adjustments that happen in these numbers. So I think you got to wait really another quarter to see what's really happening in the economy. There's some statistical adjustments that are being made that I think really do affect the numbers.
Just want to backtrack and clarify what you said there, Michael. Did you refer to terminal may not be as high as people fear? Because we've been hearing indications that it could be as high as 6%, and the market's going to have to factor that in.
I don't think it's going to be 6%. I think it could be 4%, which is higher than average. But 6% is kind of what I would call a bad case scenario if the Federal Reserve has really had no impact on inflation. And I think there's going to be evidence to suggest the Federal Reserve is having impact on inflation, although I think they are going to be this coming Wednesday, be pretty hawkish in their comment.
So, Michael, got to ask you, inflation, or rather recession scenario, we've heard hard landing, we've heard soft landing. Now people are talking about no landing. What do you figure?
Well, I don't know what all those phrases mean. Here's what I think you're going to see is a shallow recession. And the reason I think you're going to see a shallow recession is I think the Fed has increased interest rates sufficient to significantly slow down the economy. But I also think the Fed is ready to pivot if, in fact, the news gets to be worse than they expect. So I think there's always sort of this hope, and I think it's a possibility that if, in fact, the economy starts to slide towards a recession, that the Fed is going to be less hawkish, talk more dovish, and potentially towards the end of this year, even lower interest rates.